Okay, so what is going on at the moment on gold? So from a daily perspective, what can you clearly see? You can see that the market is basically moving inside of this wedge formation. So basically consolidating inside of this wedge formation, creating lower highs and higher lows. So at the moment, the direction is not clear from a daily perspective because the market is consolidating. Now, from a weekly perspective, what can we see? Now, on the weekly, we can see that the market has basically managed to break above the previous high and now is consolidating above this high. Now, sometimes when the market creates this is actually a trap, meaning that many people will say, okay, the high is broken, the market is creating a wedge formation. It's a continuation pattern after an impulse to the upside, therefore we can expect continuation to the upside, and that is true. But sometimes, specifically when the market is doing that just above the high, is actually a fake and the market will then drop, which in this case does make some sense because here we also have basically this clear demand area at this red candle zone, which the market might want to go and test to grab some liquidity because at the moment it does seem a little bit overextended to the upside. Now, if we can see what is the situation from a COT perspective. So what hedge funds are doing at the moment on gold, we can see that actually it's pretty true that they are during this consolidation period closing their long positions. So meaning that basically hedge funds are taking their profits on the long that they had on gold. In fact, what you can see with the last report is that during this consolidation, what is actually going on? Hedge funds are closing a lot of longs. They actually close 11K long positions, so thousands of long positions getting closed, and they started to build up some short positions during this consolidation. So this seems to be actually a distribution phase here for a gold. Now, obviously, there is no clue yet on how this will actually play out. We know that they're closing their longs. We know that they already built up some short positions, so we can expect a move to the downside, but there is no confirmation for it yet. Now, there are two possible ways in which this can play out if the market clearly wants to go to the downside. If the market wants to continue higher and then from here, they want to basically move the market down, there is nothing we can do. But at the moment, our job, and that holds true basically always, our job is to position ourselves with the best risk to reward and best probabilities as possible. So let's identify the structure. From a daily perspective, here is the structure. It was previous resistance here, eastern support here, ascending trend line, descending trend line, everything is marked up. Perfect. Two ways in which basically if the market actually wants to go to the downside, it can play out. Number one, the market can make a fake breakout to the upside. One candle, one daily candle that closes above the wedge. Most retail traders will start to long. That is perfect because at that point, hedge funds can short using their liquidity, close back below the trend line. And if this happens, if we have a fake breakout of the downside trend line, then we will absolutely, with students, be looking on the 4-hour time frame for one of our valid entries for a nice short position. Option 2. If the market will from here break this structure to the downside, so both the trend line and the daily structure, then on the retest of this level, we will absolutely be looking for possible shorting opportunities if on the 4-hour time frame we will have our rules satisfied for the short position. And if the market just wants to go to the upside, we are fine with basically missing out on the move to the upside because basically at the moment the probabilities are higher to the downside. We see that hedge funds are closing their longs and starting to open some shorts. The market is at the weekly high and I don't want to be longing at a weekly high after I know that hedge funds are closing their longs and the market is basically seems to be basically creating a distribution phase. So if we will have a fake breakout to the upside, we will be monitoring on the 4 hours for a possible short position if our rules will be satisfied on the 4 hours, and on the daily here, if the market will break on the retest, we will be looking for a nice short position. Now, if you enjoyed this free analysis and education, make sure to drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.